Good morning. It's Market Day Report. We're so glad you're with us to start the week. Let's see how markets were trading in the overnight session. We'll start with the corn market. Look there, lower across the board. Down a penny on the old crop, penny and a half lower on the new crop December as it slipped down to 409 and a quarter. Now, soybeans will be trying to shake off a 6-day losing streak. 6 consecutive days in the red at the end of the day trading. 9.89 in the overnight session on new crop. That was down a quarter cent. And we go to soy meal contracts, which were higher in the overnight session. They've been higher 2 straight sessions. And then bean oil contracts have been lower, and they've been lower 3 straight sessions. Speaking of lower, how about wheat? Kansas City, well, no, let's start with Chicago. Chicago higher in the overnight session, though it's been lower for 4 consecutive. Now to the hard red, or Kansas City, contracts were higher in the overnight, and spring wheat contracts lower again. Finally, over to the cotton market. Cotton finishing the overnight session in higher territory. Let's go to Springfield, Missouri. Good place to start the week. Brian Hoops, Midwest Market Solutions. All right, Brian, let's roll into this week. What are you watching?
Hey, good morning, Tony. Well, we had lower prices tried to rally overnight for a period of time, and I think the weather is just too good out there, and it set us back to lower prices. Some new lows for Kansas City wheat overnight. Corn just came within about a penny of its new low. And I think that's going to be more of the same here going forward until we see any type of a sustained weather event. The trade is going to want to sell small rallies or any rallies at all that develop here in the grain markets. So really little to talk about other than the weather, and it looks really good over the next week or so. Some warmer temperatures, but plenty of moisture around here in the last week, and more on the way again this week and into early parts of next week. And well, it's just tough trying to find anything to really talk about that looks very friendly at all for our producers. We have a supply demand report coming out a week from tomorrow. Last year's report, if you remember, the USDA forecasts a new record high for corn and soybean yields that never were realized. And as they started to decrease those yield estimates, that's when we finally put a bottom in. So maybe that's something we can hang our hat on, is if we get some bearish yield numbers next week from the USDA, if we don't see that trend continuing into September, maybe we'll then start to see a bottom starting to form in some of these grain price markets here. But it's going to be tough. A lot of cash. Old crop needs to be moved. Some new crop sales probably will happen if we see any rallies at all. We did have a census crush report out Friday, and it was, again, friendly for the bean oil. Stocks for the month of June are at 20-year lows, but we've got a big crush coming here in this month and as well as last month, and that probably will continue.
Hey, Brian, hang on just a moment. We'll take a break, come back, and we'll talk livestock futures. Could we see fireworks this week? We'll find out. Market Day Report continues in a moment. Just looking where we ended up with cash cattle last week, 235 to 236 in the south and 245 to 247 in the north. That's roughly $3 to $5 higher than the previous week, but $5 higher on dressed, finishing the week at $385. Let's go to live cattle futures. This is how we ended the session on Friday, up 222. August contract settled at 230. October 223.52 was 37 higher. We'll open that market in 10 minutes. Over to the feeders. August up 302 at 334.40, settling just 32.5 cents off the day's high. September at 333.65 was up 210. And then the hogs now rallying 3 straight sessions. We'll see if they make it 4 today. August at 107.42, up 30. Let's go back to Springfield, Missouri. Brian Hoops, President, Midwest Market Solutions. Cash cattle just continues to drive the train. Is that a good way to look at it?
It's a great analogy there, Tony. Yeah, cash markets really on fire last week. We had option expiration for the August cattle futures. Those options went off the board on Friday, and today is the delivery period. Certainly won't be any deliveries against that August cattle contract, but as we go into the deliveries, we're at least $5 to $6 discount to the cash markets, very similar to what we saw in June. June went into its delivery period about $7 to $8 discount and really took off and rallied during the month of June during deliveries. We wouldn't be surprised to see August do the same thing, trying to catch up to that cash. Packers cut their kills again last week. We're killing about 10% less than we were a year ago in an effort to try and prop up the box beef. We'll see if that happens this week. If the box beef finally found some stability, we are $5 to $6 lower in both the choice and the select last week. So hopefully that is the case. We can see a little bit of recovery there. Cash trade, again, it's called steady to higher one more time this week and leaving the futures discount. And it's hard to sell those discounted futures against the cash. So some point the cash markets will peak out. Don't know that that'll be this week, but sometime here it could happen. The hog market, yeah, you mentioned they were up 3 straight days. They might get a little boost, at least on the opening this morning, as cutouts were a couple dollars higher on Friday afternoon for pork.
All right. And before we go, how about looking at energies to start the week? West Texas Intermediate has settled lower 2 straight sessions now, and we're lower today at 65.70. Any thoughts on the energies?
Yeah, we had a spike last week where crude oil jumped on President Trump threatening sanctions against Russia. And once that news kind of died down, we pulled right back into this mid 60s. This kind of looks like a fair price equilibrium for crude oil in the mid 60s. We still have a little bit of a war premium probably priced at that level, but we're producing massive amounts of product. And it looks like OPEC Plus over the weekend talked about increasing production during the month of September. So that's really putting pressure against our crude oil prices this morning.
Yeah, and there goes nat gas. Nat gas is lower as well, so we'll keep an eye on what Darren Newsom calls the widowmaker. Brian, great to see you. We'll see you again soon. Brian Hoops, Midwest Market Solutions.